So let's dissect this. So if you look at what yields are yielding right now in the fixed income market, you're getting about 2.8, 2.9%. If you don't think that yields are going to go significantly higher, which we don't, then you're locking in about a 3% return from fixed income. When you look at the return you can get from equities, you think even in a very conservative environment where you're only getting, let's say, 5% equity appreciation, you're getting an additional 2% from dividends and maybe 1.5% from buybacks. That's an 8% return that you're getting from investing in equities. Even if you have a little bit of multiple derating, you're still picking up a significant, call it a mid-single digit number return that you're going to get investing in equities. So we still recommend to our institutional clients as well as to our ultra-high net worth clients being overweight equities at this point in the cycle. The economic growth trajectory in the U.S. is still really healthy, and until we get to that pivot point where we think growth is going to start to inflect more negatively, we're still very much overweight equities.
Yeah, Joe, you know, he gives sort of nuanced answers. He doesn't like to comment clearly, and he'll make it clear, plain as day, on the day-to-day direction of the stock market. It's not what he does, and it's not why he is the greatest investor that has ever lived. Is there a peculiar market reaction today on the heels of the interview?
Not at all. I think Mr. Buffett's comments are the comments that we all share in our observations about the market, whether it be buying a little bit more Apple, maybe not buying as aggressively as we might have in years past, or maybe when Pete did 15, 20 years ago when he first got into the Apple name, his comments on the economy. We all would like a dip in the market. The NASDAQ's up 5.5% in the month of August. Are we going to see another 5.5% higher in the month of September? I would argue that's not good for the marketplace. We all want that dip. And the last thing that I thought was very compelling was he's buying a basket of American stocks on a day when we're seeing a currency infection with South Africa, with Turkey, with Argentina taking rates to 60%. He's buying American stocks, and it shows the excellence of the American consumer, the American corporations, and the American economy.
Yeah, consumer, Sarat, which he was very positive on, obviously, in his commentary.
And if you look at it, he's not buying the market. He's buying specific stocks. And look at the valuation. You mentioned Delta. Delta's at 10 times earning. The market, you could argue, is at 16 times earning. He's buying Bank of America, 12 times earnings. Look at the stocks that you go down his list, Coca-Cola, all these companies that the consumer's behind them, they've got strong balance sheets, and they've got growth ahead of them. So I think it's a stock market. We talk about that a lot. Are you buying the market or are you buying the specific stocks? And what he's saying is I'm going in and I'm buying specific stocks that I like, and you can see the list that he buys.